with Charles Gillespie, who is the CEO of Gambling.com Group. Charles, how are you finding SiGMA so far?
Absolutely fantastic. I'm blown away by how many people are here and how busy the entire show is.
Yeah, it's a big one this year, isn't it? Now tell us a little bit about Gambling.com Group and what you do.
So Gambling.com Group is one of the largest casino affiliates in the industry. We mostly focus in the UK. Of course, Gambling.com is one of our websites, but we have about 50 websites. We are growing hand over fist, and we are also doing acquisitions as well. So the company is headquartered in Malta, so we're happy to be here at SiGMA in Malta, and we're also growing very much in our office in Dublin, where we have most of our people in the organization.
Fantastic. And obviously you've just been speaking on a panel. Tell us a little bit about that and what the main issues were that you were speaking about.
Yeah, so the panel was about M&A, obviously a very hot topic these days in terms of affiliates trying to figure out how much their business is worth and whether they can sell it and whether it's kind of their golden ticket. We've done 14 million euros in acquisitions so far this year. We just raised another 9 million last week to do more. So I think the takeaway from the panel was basic stuff. I mean, you need to be prepared. You need to have all your accounts in order. You need to be able to present clean financials to anybody that's going to look at a business. Before you begin that process, you really need to make a decision about whether or not you want to sell the business in the first place. Some people kind of explore, have these kind of exploratory talks and go into the process half prepared, and then change their mind kind of late in the process, and that's obviously frustrating for buyers in the market. The buyers, they all kind of want a lot of the same things. They want revenue from regulated markets. They want a high portion of rev share in a business that just lowers the risks as opposed to having a business dominated by CPA revenue. They want simple things. If I can buy a one website that makes 100,000 euros a month, then that's a lot easier than buying a company with 100 websites that makes 100,000 euros a month. And similar to that is scale. It's to do a deal for a website that makes 200,000 or 300,000 euros a month is about the same amount of work as it would be to buy one that makes 50,000 euros a month. So you might as well buy the one that's bigger and get a bigger impact.
And how easy is it to scale a business like that?
Well, it's hard, and that's why you see such surprising prices for a lot of these affiliate websites. In many cases, these websites are quite simple, run by one or two people, but they fetch a pretty impressive price. And the reason is it's actually quite hard to do this. Achieving very competitive search engine rankings with Google on competitive keywords neither is it easy nor is it fast. It usually takes a couple of years to do it the right way. So I think that's why you see high prices. But in terms of scaling the business from the perspective of the larger affiliates that are aggregating the smaller affiliates, we definitely like acquisitions where we think we can add something. If it looks like it would fit in well with our technology platform, if we think we can improve the commercials, maybe obviously trim some costs, just make the assets perform better, then it would definitely be more interesting to us.